Hi there traders and investors, today is Tuesday, July 4. I'm glad to greet you online and introduce a regular market review prepared for InstaForex. Today the US is celebrating Independence Day. Yesterday the New York session was shorter than usual with muted volatility. Today, the US markets are shut full day, so financial instruments are likely to trade sluggishly. Still, I've invented some trading plans that I'd like to share with you. Let's go. You're now looking at the gold chart on MetaTrader 4. The price is forming the fifth wave. I expected the price to climb to these levels and a bit higher. I remind you that the buying impulse began after the news on June 29. Gold created a gorgeous pin bar on the daily chart. The buying impulse popped up from the 50% Fibonacci retracement. So the third wave came into being. Then the price made a swing high and pulled back. The fifth wave followed later on. This wave didn't trigger the seller's stop losses. In theory, unless the public holiday today, American traders would grab that liquidity. I reckon it will happen today. This area of around 1938 should be broken sooner or later. The euro-dollar pair jumped yesterday and terminated its three-wave structure formed on Friday. Here's the impulse followed by a retracement. The third wave updated a high at 1.0916 and then went down because the market was thin yesterday. The currency pair made a downward correction in the Asian and European sessions. What is interesting about it? I detected a swing high yesterday. Now the euro-dollar pair is trading exactly at this level. We could venture into long positions, setting a stop loss at that low and a take profit about the level, embracing two highs printed yesterday and on Friday. This target will be hit tomorrow at the European or American session. The dynamic is similar to the moves of gold but with less volatility. Something could spoil this scenario. The euro left a downward target at 1.08 formed after the Fed's meeting. So there is a risk of the price falling to 1.08. The overall trend is still bullish until that downward target is broken. I suggest we plan long positions. The pound sterling has been extending its upward move with confidence. It created a nice swing high on the 4-hour chart which was tested yesterday. The instrument has been developing a classic three-wave upward structure on the 4-hour time frame. I guess it could climb to the high of last week. The US CAD pair is not generating any trading signals. It's neither growing nor falling. I cannot suggest any trading plan after the instrument broke the K low of the buyers, so I'm staying away from the market for a while. The dollar-yen pair is trading at the test zone. The level of 145 is visible to the naked eye and could be a turning point. For example, the buyers could fix profits. Amid profit taking, the instrument could make a considerable downward correction. Those traders who bought the currency pair in February, March, and April detected technical resistance at that level. Having checked the activity of market makers, retail traders could decide to close their long positions. In turn, short positions will be opened. I mean that the pair might go down during profit taking. I urge you to be careful. I remind that currently the instrument is trading at the level from which the yen strengthened notably in November as a result of Forex interventions. We could search for sell signals on smaller time frames. That's all I wanted to tell you today. See you online later.